Alright guys, it's me again. So tomorrow is the final trading session of the year. We have made it. But typically what we would do over here is simpler on the last day of the year, is look for something called tax loss trading. So pretty much what this is take something like a Zoom here. So Zoom, Peloton, Pinterest, Neo, it's a pretty long list this year. But pretty much the tax loss selling, what's happening here is, anybody who's invested in Zoom, especially if you're buying back here at the highs, you're sitting on a pretty nasty open loss. So in an effort to reduce your tax bill, you sell that position into the end of the year, you realize the losses. It's pretty much what's going on here. So look at it as, forced selling pressure for tax purposes into the end of the year. I think a better way to look at it is I'll take an analogy from my colleague Henry. You hold a beach ball underwater. Well, as long as you hold the pressure on it, it's going to stay pinned down. But as soon as you take your hands off the ball, that sucker comes popping through the water into the air. So pretty much here all you have to know is that names like Zoom, Peloton, Pins, just these total dudskis here, typically into the last day or 2 days of the year, there's going to be forced selling pressure, again for tax purposes. But then when the tax loss selling is done, typically tomorrow or January 1st or the first trading session of January, typically the tax loss selling is done, so that forced selling and that pressure comes off. Typically leads to a pretty good bounce here. I'll show you a visual example from last year. So last year JC nailed a trade here in GILD. We had a lot of good trades last year in the tax loss, but if you look at GILD, right? So pretty much last year this thing goes from 85 bucks and all the way down towards 50-ish. And if you look right here, all the way into the very end of the year, you're getting that nasty continuous selling pressure. But then notice on December 31st, so the last trading session of the year, everybody's done with the tax loss selling, and this sucker just rips. So pressure comes off, pop goes the weasel. So pretty much that's what we're looking for here. One thing I want to stress though, at least for me, for those of you who are over here at Simpler, we're doing this live tomorrow together. I'm not looking to come in and buy Zoom, for a 5-month hold. So this isn't really a buy and hold thing. I'm not looking for a long-term investment on a discount. Now you could, it's a totally different plate of opportunity. What I'm looking for is just that short-term bounce. But let's not forget Zoom, Peloton, Pinterest, Neo, DocuSign. There's so many of them. They're in downtrends. So what I'm trying to say is the last thing I want to do is take a tax loss trade on Zoomster here. In 2 weeks from now, we're trading at 160, and I'm still holding the position. I don't want to do that. I'm looking for a short-term bounce, 1 to 2 weeks or nothing. So the idea here is let's try to catch that bounce, but let's work a good risk reward now. Let's work a good risk reward. So something like a Zoom, my risk here is going to be down to like 175. If this thing comes in and instead of bouncing, it breaks these recent lows and closes under them, I'm trying to ditch the bastard. So 175 is kind of my risk. And on things like this, you're looking for a pretty aggressive bounce. So, at the very least, I'm looking for Zoom to trade back above 200. I'm more so looking for a move up into about 3/8 AR, 230-ish. So here's the question. Can we structure a trade where our profit up here at 230-ish far outweighs the risk down here at 175? So you could do a few different things, right? You could do a debit spread, a credit spread. What I'm looking at here is a Delta 60 put credit spread. Right? So we're going to sell the in-the-money put 200 by 195. So sell that 200 bad boy. But if we can lock in, $3 and change here a credit, on a one-contract basis, the cost of entry into this nightclub is already pretty good. Risking 180 to make 320. But we have targets here, so we're really not going to hold on for max profit, and I ain't trying to sit here for max loss. So look at it from this perspective. We'll toss the thing under 175. We need it all said and done back above 200, but we're really looking for a push into about 230. So if we throw this trade here into the Analyze tab, let me move myself up there. But if we throw this trade into the Analyze tab, let me do this for you. Right, there we go. So let's take a look here. So say we take the trade tomorrow, and mind you, this isn't investment advice. So if you're in the options room and I send out a trade alert, well, different story. But just trying to give you a few ideas here for now in the public setting. But you got January 21st expiration, so say we take the trade tomorrow, and then by next Friday, Zoom here is kind of crap in the bed. Close it under 175. So into January 7th, a move down to 175. We're down about 125 bucks per contract. So not bad on a trade that offers a max profit of 320, so long as the thing can close above 200. But there's our risk into week 1 down at 175. And if we got that move into 220, 230-ish, we're up closer to 300 bucks. So let's round up here a little bit. A move into our target in week 1 nets us about 300 bucks, and a move into our exit of 175 or lower, we can round up a good healthy chunk here. Let's just call it 150. Which isn't the case at all, right? So call it 125, 130 bucks. That's smaller than our max potential. It's smaller than our profit up at our target at 230, right? So that's what we're looking for. It's a fraction of what we stand to make if we're right on the trade. So let's look at this into January 14th. So we're a week out from expiration. We're down here. We're getting that close under 175. Now we're down about 150 per contract. But if we're up here at our 220, 230-ish range, we're up 300 and change. So really, whether this explodes into our target of 230, whether it just simply closes at expiration above 200, we're working about a 1 to 2 risk-reward ratio here. We're going to risk about 150-ish, down around 175, to make just about 300-ish. So to me, that's a good risk reward. That's just an example of what I'm looking for here with the tax loss harvesting. So Zoom is probably a good candidate here. I think Peloton, definitely a good candidate. You got Pinterest. Take a look at the old Pinster here. Okay, but keep it simple. Throw these things to the curb if they close under the recent lows. It's not what the tax loss bounce should look like. So Zoom, Pinterest, Peloton, probably Palantir, the 3 Ps here. Definitely Palantir. Then you got Neo. Neo goes from 70 bucks to about 30. So just a few ideas for y'all. That's what we're going to be looking at over in the simpler rooms tomorrow. But for those of you that haven't traded the tax loss harvest before or even heard of it, usually a fun way to wrap up the year. So keep it small, make sure the risk reward makes sense, but you got a lot of examples this year of things that have basically gotten cut in half over the last handful of months. So what you can do is, go on Google or run a scan here, look for things trading near their 52-week lows. Go get a list of the stocks in the S&P 500, look at the worst performers on the year. That's how you can find some ideal spots for this kind of bounce, but I think Zoom, Peloton, Pinterest, there's a handful that should be poised to offer some pretty cool opportunity. So that is what I got for you in tonight's quick video. And in the Sunday video, I'll tell you what I did here as far as the tax loss goes. But hope you found this helpful. Keep you posted and talk to you in the next one.